Well, the last time my guest was on back in September, he was calling for gold to see its lows around Thanksgiving. Well, he's not far off. The metal hitting a 5.5 month low earlier this week. Please welcome back to the show Vince Lanci. He is the founder of Echobay Partners and a frequent contributor to the very popular website ZeroHedge. Vince, good to see you again.
Good to be seen. Thank you for having me back.
Absolutely. You said back to me in September that gold would see its lows of the year around Thanksgiving. Is this it? Is this as bad as it gets for gold?
You're going to do that to me already. I think it is. Now, I'll qualify that in a second, but I think it is. I think we're good for the next 3 months.
Okay, let's talk about your reasoning and why you think that.
The gold market has a historical pattern of dropping. We talked about this before. A historical pattern of dropping from August through November. And that's the speculators getting out of their positions as they wrap up their portfolios for the year. It also coincides with the exit of the December contract. What happens in late October, early mid-November is you start to see allocations come out for investments into the new year. And we don't know when that starts. It could happen the day before Thanksgiving. It could happen December 22nd, but it starts. And that's the reason that we're going up. The question I think you're asking that's really important is why now? Why not a week ago or a week from now? And that's because there's a lot more shorts in the market this week.
Fair enough, Vince. Basically, you basically used the word that, or you mentioned hedge funds, how they were liquidating last
Right.
week and this week. So will that bleeding stop?
I don't see why it shouldn't stop. And I'll speak plainly. The December
Just
contract.
be you, Vince. Just let it out.
Okay. The December contract is a huge contract for gold and silver. And what ends up happening is people end up, hedge funds and speculators and prop desks put a lot of money into it, and they hope to get a profit by the end of the year. And if they don't, they puke.
Okay.
And those who don't puke have deeper pockets. They roll into the next contract, March in silver, February in gold. They are more resilient and less likely to sell because they're losing money.
Let's bring up the manipulation aspect. It's interesting that JP Morgan paid close to $1 billion in fees for for spoofing the market, yet they
Right.
made that money back in precious metal sales.
Yes.
They made $1 billion back in precious metal sales, the same
You're
amount they
giving.
paid for
Okay.
having spoofed the market.
Okay. I think a comment to that would be if you've been spoofing or manipulating a market from time to time for 20 years and you pay $1 billion fine and then you make $1 billion in less than the next fiscal year, that's a good cost of doing business.
I guess the question I was getting to is, a lot of people would say, well, gold's not rising because the manipulation is still taking place. And I know this is a taboo subject, and whether there is manipulation or there isn't. I just want to get your take on it. And I know we've spoken about this in the past, but do you have any new revelations here? Because I know you've studied this also in depth.
Yeah, I mean, we go way back looking at this. You and I were looking at the case when it first started. You had the documents on that. That was very interesting.
Yes. I received the documents in a brown paper envelope right out of a movie. But
That's right.
yes.
That's right. It was a Mission Impossible thing. I think there's a couple quick factors without getting too deep into it, because we went into a lot before. One is that manipulation exists in every market. And by manipulation, I don't mean 24 hours a day manipulation, moments where the market is susceptible to influence by bigger players, like bluffing a pot. Call that manipulation, if you will. But people with a longer time frame, that should not affect them. And believe me, manipulation works both ways. You're probably not going to be hearing about manipulation when gold goes to $3,000. But
Right.
believe me, there will be some spoofing on the other side.
Let's talk about Bitcoin now. I know you've written a lot about this recently, and the spoofing of Bitcoin on ZeroHedge, two great pieces, Vince.
Thanks.
The topic du jour is Bitcoin taking a chunk out of gold?
Yes.
Yes, I've spoken about this with many guests, but I want to get your thoughts on this as well. Is it really hurting gold?
In the short term,
No holds barred.
in the short term, it's affecting it. It's more of a marketing ploy than anything else to get more people to put money in Bitcoin.
Yeah.
It's hype. It's a hype mechanism. But in the long term, absolutely. If Bitcoin is what it purports to be, it has to hurt money going into gold in the long run.
But you've always told me, Vince, and in past episodes, way back in the day, that gold is like your house insurance,
Right.
right? So why would you sell your home insurance to buy Bitcoin?
To buy supercharged insurance, which may
To
or
buy
may
well, I don't know if it's insurance.
exactly. Is it insurance? We don't know. Okay. The person who owns gold as insurance on his house, the person who looks at gold that way, isn't buying Bitcoin to store value. They're buying Bitcoin to create wealth. It will be a competing currency with other fiat currencies. But the reason I think it puts a dent in gold investment is not, and I don't like to use the word investment when I say gold. The reason I think it puts a dent in money going into gold is because going forward, you now have another choice on the menu. It's the end of the year, and Bank of America or JP Morgan say, we think you should have 7% of your money in an inflationary hedge. And traditionally, those choices are gold or oil or some index that contains a weighting of the two. Now, whether you agree with it or not, perception is that Bitcoin is, and there's risk involved here, but Bitcoin is a substitution product for gold or oil that hedges inflation. How does that not compete with gold?
Fair enough. Fair enough. Let's bring it home then with this, okay? Let me present to you this situation.
Yeah, the indifference question, right? There we go.
No, $500,000, okay?
Okay.
Let's say US, let's say that's 5% of your net worth, okay?
Okay.
Gold, Bitcoin, cash. How does Vince Lanci break it up?
Okay. I think it's important that you say what percentage of your net worth is, because if that was 80% of my net worth, I'd be like, I'm putting in cash.
5%, and I'll give you a time frame. You can cash out whenever you want.
So I can get out whenever I want?
Yeah. Get out whenever you want.
I can't get back in.
It's a simple game.
I'm sorry.
All right.
I'm sorry.
All
No,
right.
no, I can get out. No, we close the trade whenever I want. How's
Yeah,
that?
that's it.
Okay. $500,000.
$500,000. Yeah.
Percent of my net worth in the markets. And sure, I would put, I wouldn't have to put a big percentage of that into Bitcoin because it's going to be so volatile. The rate of return I'll get from it is going to far outweigh the amount of money I have to risk. So 100,000 in Bitcoin, 300,000 in gold, and then 100,000 in cash.
Okay. Okay. I thought you were going to
That's
throw
it.
a curveball and be like, can I put some in silver?
I wanted to. I wanted
Okay.
to. I wanted to. We talked about that, and I was against having silver in there, but it really kind of is industrial. Bitcoin's not industrial. Gold's not industrial for the most part. Cash isn't industrial. Okay, can I put 50,000 in silver? I changed my mind.
Yeah, but look, we're talking about solar panels. It's industrial, and exactly for that reason that silver bugs would say that's why you should be investing in silver, because it's going to take off. It's going to triple digits.
That's right. I need that. You're right. So I'm going to put 250. Let's do this. You're putting silver back on the table.
I'll put silver back on the table.
All right. So 200,000 in gold, 100,000 in silver, 100,000 in Bitcoin, and 100,000 in cash.
All right.
That's it.
Thank you. Thank you for playing that game with me. Interesting. And I like the logic behind it. Vince Lanci, so lows for gold. So would you not be buying any more gold now? Or are you looking to mining stocks? What are you doing?
Well, I would be looking to buy. Well, I said I would buy weakness and be comfortable with that because I think there's an underpinning of buying. But I also think from a shorter term perspective, I'd be a buyer of strength. I'm comfortable adding to a position above 1811.
Okay.
Is a number that may or may not be important, but it's important, at this moment. Tomorrow it could be 1820. But the reality is, I think unless we go below 1720, I wouldn't be worried about what this market does for 3 months.
If we were to go below 1720,
Then I would say some bets are off, especially if Bitcoin's doing well. That means people are putting their money in Bitcoin, not gold.
all right, Vince Lanci, partner over at Echobay and a frequent contributor to ZeroHedge. I appreciate your thoughts. Thank you so much, and happy start of your holiday season.
Thank you, Daniela. You too.
Yeah, we'll see you soon, Vince. And thank you for watching. We'll have much more for you on Stansberry Research. In the meantime, you can follow us on all our social media platforms. We're on Twitter, Facebook, LinkedIn, Instagram. So stay tuned to Stansberry Research.